First was that growth is decelerating. And the growth is decelerating for a number of reasons. The global environment and sentiment, domestic environment and sentiment, and of course the monetary policy tightening that we had done. What I want to emphasize is that the monetary policy tightening that we had done is only one of the reasons for growth deceleration. The second consideration was that the WPI inflation was moderating. However, we pointed out that food inflation is mainly responsible for that, particularly seasonal factors in food inflation. Even in food inflation, vegetables are playing a big role. If the food articles inflation between November and December, it's come down from 8.5% to 0.7%. That's very dramatic. But if you knock out vegetables, the decline is quite modest, from 8% in November to 7.1% in December. So first, food is a big factor in WPI inflation coming down, and vegetables are a big factor in food inflation coming down. But in the other components of inflation, non-food manufacturing inflation is still elevated. The third consideration that informed our policy was, of course, the liquidity situation. We had done OMOs of about 700 billion rupees. But we'd also drained some liquidity as a result of our forex intervention. So the net impact of those two big things was that there was net drain from the system. And for other reasons too, there's structural deficit in the system, and we thought we should replenish that. So those are the considerations that informed our policy decision. It's difficult to predict at this point of time the pace, timing, and magnitude of the policy rate reduction. It will depend on a number of factors, including the core inflation, credit growth, the rupee exchange rate, and most importantly, the fiscal deficit, which we have emphasized in the statement. We discussed hedging by the corporates, and the banks, of course, told us that whether to hedge or not, how much to hedge, is decided on a case-to-case basis as part of a loan deal. While our view was that it cannot be left entirely to the corporate to decide, the bank must have a policy on it. And in the course of the next week or 10 days, we will issue some guidelines to banks. But the main thrust of those guidelines will be to say that the banks must have a board-determined policy on hedging of foreign exchange exposure. Dr. Chakravarti and Anand Sinha have agreed that in the next 1 month, they will have a meeting with about 10 large banks to discuss the NPA situation and see what measures have to be taken by the banks, if any by the Reserve Bank, by the state governments, by the central government, to ensure that the profitability and the viability of our banking system is intact as it is now.